Speaking of awesome stuff, we have what I'll say this is going to be one of the best podcasts. Every once in a while, we have a guest, at least from my perspective, that really knocks it out of the park on what they share with us. In the past, those have been people like Jeff Watson or Joe McCall or some of the great information we've been able to provide you guys that's different and a little one step beyond what you just hear of all the noise out there. There's so much noise out there, it makes me tired, honestly. And what our goal here is at the Nuts and Bolts of Real Estate is to filter through all that noise and find the best guests that really have something worth offering to you guys and worth listening to. And today is going to be one of those days because I am going to introduce you guys to my friend Jeff Stevens. Some of you might have heard Jeff or been in Jeff's circle on other real estate investment clubs or threads or whatever, but we're going to get it straight from Jeff today. He is an investor, a real estate coach. He is the founder of the Thoughtful Real Estate Entrepreneur and the host of the real estate podcast called Racking Up Rentals. Go look it up and make sure you subscribe and check out his podcast. So, there's a phrase that I'm about to say to you that I got why I identify with Jeff and the way he does business and how he coaches other investors to grow their portfolio through his deals workshop, which you're going to get to learn about later. And that is where he can teach you how to buy a rental with seller financing, which is our topic today, probably in the next 90 days. And the key is through developing this is the words, a win-win relationship with the sellers. Now, you might think you've heard that before, but today we're going to teach you a little bit of something where I don't think you have. So get ready to take some notes and learn, how Jeff uses his thoughtful approach to growing his real estate portfolio through seller financing. So welcome, Jeff.
Thank you so much. It's an amazingly kind introduction. I'm so grateful.
Yeah. Well, it's awesome. And he lives in one of my favorite spots in the entire world, Bend, Oregon. So we're already, Jeff, not already, Jeff, we're already jealous of Jeff today because he lives in such an awesome spot. So thanks for joining us. And we got a lot to cover. So let's just jump into it and I'll let Joe kick us off.
Yeah, Jeff, our first question is always about getting to know people better. So we'd love for you to tell us your history, like where you grew up, how you grew up, and how that got you to where you are today.
Yeah, absolutely. So I'm a native Oregonian. I've actually lived here my whole life. I grew up and went to high school in Bend, but then moved away and was over in the Willamette Valley of Oregon at University of Oregon, and then 20 years in Portland. And so I think of myself as a Bendite and a Portlander sort of simultaneously. And then hilariously and oddly, 3 weeks before COVID started, of course, we didn't know, we moved back here to Bend. So I've been back here now for a little over 3 years, but I've been an entrepreneur pretty much my whole career. I did have a real job for 2 years. And, I wish my ego says, I wish I could say I never had a real job, but I did have a real job for a couple of years in marketing. And I worked for a bank, a very marketing oriented bank. And after a couple of years of that, I left and I was starting a small marketing agency. And we did that for about 10 years full time. And during that time, I was just exploring new ideas. I picked up the Purple Book everybody has read and been inspired by. And we had just bought our own primary residence a couple years before and kind of looked at the equity and the appreciation and fortunate timing we had. And I thought, I bet we could tap some of that equity and buy a piece of investment real estate. So that's what we did. Looking back on it today, I wouldn't buy that exact property. I wouldn't buy it in the manner I did, but I'm sure glad I did it then because it got me in the game. And that was in about 2006. So for a few years, we had a couple rental properties. We'd make some money in our business. We'd pay down our HELOC and then we'd buy another rental property, but it was very much a part-time thing. And then in 2013, I felt like, gosh, I think I'm done with the marketing thing. 10 years is great, but I'm ready for something new. And boy, this real estate thing has really inspired me and intrigued me along the way. So 10 years ago that I made a pivot to doing this full time. And took a couple years to kind of really dial in my approach, but now I'm several years into, really buckling down and doing exactly what I do right now. So I've been an entrepreneur for 20 years. It's a 20-year anniversary, which makes me feel very old to say, but also is kind of a neat milestone.
Fabulous story. I hear you on getting the old part, right? Do we want to mention a mentor or anything to throw out there? I know that you've had a mentor that's been important to you in life, as everybody should seek out. And I'm wondering if you want to tell us about any of that.
Yeah, absolutely. And the quick story that led to that is I had been getting to know some other entrepreneurs in real estate in my community as from say 2013 to early 2015 maybe, but I was full time at that point, but I was still really trying to figure it out. And one day I was on a bus tour with some fellow real estate investors that they were driving people around, spending all day kind of showing the deals and that they'd done and giving little case studies. In the last stop of the day, we pulled up to this house and my eyes went wide and I thought, oh my gosh, I had this property in contract just a few months before with seller financing, but the house was in a bad state with like some more significant issues like foundation things. And I was trying to renegotiate and I couldn't figure out the deal structure to make it work. And so I had to let go. And I felt bad about that. So we pull up this day and I'm thinking, oh my gosh, I failed on this deal structure. And my friends and peers here, they got this deal done and they're telling the story. And the truth was, as this person, Mike Nuss, as a friend with Rare Bird Real Estate in Portland, was telling the story of the deal structure, I'm thinking to myself, I think I'm a pretty smart guy, but I'm kind of lost here. And I went up to him afterwards and I said, Mike, gosh, apparently there's more I need to know. And Mike looked at me and he said, you know what? If you want to be as good at this as I think you do, and I think you can be, you need to get to know Greg Pinio. And at that moment, then I said, all right, I've been hearing this guy's name a little bit. I can't deny myself this, mentorship any longer. So I reached out, we built a great connection. And so I've been working with Greg now, consistently since 2015. And it's made all the difference in the world to me. I mean, personally, as well as professionally. And so I feel like I'm very much trying to be an advocate of this approach that I have learned from him. And I've tried to, add my own little polish and spin here and things like that. But this is what I've learned from him and I've practiced, and I'm trying to get out and spread the message, because it kind of blows my mind that more people don't necessarily know about this approach to doing things.
I would agree with you 100%. I would agree with you. So thanks for sharing that, because everybody needs to, you are who you hang out with. You got to be around people and be constantly learning. And so, shout out to all the people that coach and mentor and all that stuff, including yourself. And of course, Greg Penio and everybody else out there. So, well, let's get into it a little further then. So what type of properties do you invest in? Like, what's your ideal investment? Or is it whatever you're able to, architect on whatever is the best scenario?
Yeah. So I have maybe a somewhat unique way to define kind of like what my sandbox is, or my buy box, as people might say these days. I'm definitely very focused on certain areas. I'm not somebody who wants to buy properties out of town, really. If I were to do that, I would have to commit to being there a lot for a long time in advance, and then a long time afterwards too, because I'd really want to know it like the back of my hand. So I have very tight kind of areas where I like to buy. And in my case, those are mostly kind of infill types of things. I'm not really big on the suburban areas, because I just don't have as good of a feel for them. It's not because I'm saying I think they're bad investments necessarily. I like to be able to hear an address, close my eyes, and pretty much be able to picture it. And so I'm very comfortable with certain areas. The next thing, though, that is very, very important to me is that I call this negotiation dynamic. One of my criteria is negotiation dynamic. I only want to buy properties when the process of buying properties aligns with my ideal negotiation dynamic. So I'm looking for a type of person who is going to be the owner and the seller of that property that I can have a certain type of conversation with. I feel like I'm a regular person. I connect well with other regular people. I like to be able to sit down in someone's living room. And so to me, there are certain types of properties or maybe sizes of properties where you're not going to be in a living room during that negotiation. You're going to be in a boardroom. And so I'm happy with single family. I'm happy with small multifamily or medium, larger multifamily, small commercial. We have some of all of that. But the common thread, though, was that the person who owned it was a regular person who I could just sit down with and we could have a regular person-to-person conversation. I don't buy properties that are listed. I don't buy properties where there's like a board of directors that has to issue some kind of a declaration to be able to do this. I just want to. I'm a mom and pop person. I like to buy properties from mom and pop people.
Do you find that mom and pop investors sometimes have properties in the name of an LLC, or are you specifically looking for somebody's direct names on title?
Yeah, I definitely find that mom and pop people can absolutely have LLCs. I mean, I'm a good example of that myself as well. So when we pull lists to market to, which is part of our marketing strategy, as long as the property meets the other kind of criteria, location and size and things like that, we don't get deterred by the LLCs. We'll just research those, figure out who the real people are, and then, we send it to, Bob and Janet instead of the LLC.
And so in order to, let's say, lay the groundwork, set the stage for the potential of connecting with the right type of seller in the right type of situation, what type of lists are you pulling?
Yeah, so I like to buy properties with seller financing. And so I kind of work backwards from that end. So start with the end in mind, that expression. So I start with that end in mind and I say, I want to buy properties with seller financing. And that means I need to be working face to face with people. And I need to be having the type of conversation that leads itself to seller financing, because there's obviously some elements of trust and relationship and rapport that are pretty important with something like seller financing. There has to be a level of confidence between the seller and the buyer. They need to feel good about the buyer, of course, and their credit worthiness and all of those types of things. So I work backwards from that. And I like to say that I need to start with a way of reaching people that's going to facilitate the right type of conversation. So we tend to talk about lead generation in this business as being a topic of like what works and what doesn't work. But what I would say is that it's not so much about what works in the sense of what will make the phone ring or what will create a lead. But I like to say we're setting a stage for a dynamic that's going to play out between us. And so we have to be very careful and thoughtful about the way that we set that stage, and the way that we reach out to people is going to have a big impact on that. I mean, just as a dead simple example, you're going to have very different dynamics if you're getting leads from a Bandit sign and a Craigslist We Buy Houses ad and a nice simple personal letter. It's not to say that any of those leads are better or worse than others, but they're going to be very different types of people, different types of dynamic between us. And so anyway, that's what I like to do, is I like to set the stage for something where the other person feels like, oh, we're peers. A peer relationship is a safe one. There's no risk in having this conversation. And I think a lot of real estate marketing kind of sets this dynamic where it's like, hi, we're the lion. We perceive based on your bad roof that you're the gazelle, and let's talk so that we can eat you. And I don't want any of that going on at all,
And so how do you avoid that? Does that mean that you're sending letters, or does that mean that you're only marketing to high equity? How do you do absentee owner if you can't get face to face with them?
Yeah, so we pull a list of a mailing list. This is of people who are absentee owners. See, I got excited a minute ago talking about the strategy, and I forgot what you had originally asked for. So seller financing is what I want to buy. Who are the people who are the best candidates for seller financing? Because seller financing is really much more about people than it is about properties. It's about, we're shopping for a person. It's one of my favorite things to express, to share, is like, we're shopping for a person when we're shopping for seller financing, not so much a property.
Perfect.
So who are the people who are good candidates for seller financing? Well, one, if they were to sell their property, they would have a painful, nasty, gnarly capital gains tax situation. That's certainly one big criteria. And who are those people? Well, it's usually not owner occupants. If they have any capital gains tax at all, it's going to be pretty minimal in most cases, right? So we're talking about landlords, absentee owners, people who don't live, like people where the tax bills get sent to an address that's different than the property address. In other words, we're looking for people who have rental properties because they like to have income. And if they were to sell a property, well, there goes the income, and that might not be great for them. They're at a time or maybe a place in their life when they know that they could defer capital gains through something like a 1031 exchange, but they're thinking, gosh, that sounds like I'm just trading one responsibility for another. That doesn't sound that great to me either. And so what this means is I pull a list of the properties in my area that have been owned by the same owner for at least, say, 10 years, because now over that time, they've certainly seen some gain in all likelihood. Absentee owners, absolutely. So people who don't live there. And now we have a list. It's like going fishing in a pond that you think has at least a reasonable chance of being stocked with the kind of fish that you'd like to catch. So then the next thing we do is we just send them a very simple, like it's a very strategic and also simultaneously just insanely simple type of letter that just simply introduces ourselves. It's almost, I'd say the marketing is as much about what we're not doing as what we are doing. Like, we're not saying we buy houses. We're not calling ourselves a solution provider. We're not saying we want to close fast. We're not saying we want to pay all cash. We're not saying we'll cover your closing costs. Nothing assumptive like that. It's really simply an introduction from one peer to another and an invitation for a conversation should they ever be interested in doing that.
There you go. A relationship letter.
It's a relationship letter. Yeah. And it's so funny because it's simultaneously super strategic and dead simple, really, which is hilarious to me, but it's great.
Strategy is keeping it simple, right? I mean, or not, and being the opposite of what everybody else is saying, right?
Yes, exactly.
Do you find that letter, you know how they have their, let's just say some stats, who knows if they're accurate or not, where you got to mail somebody, the other way of doing things, 10, 12 times, before they'll get a response. Do you feel that your conversation rate, conversion is higher? Like, you have to touch them less times, or, people hang on to those letters, I'm sure too.
Yeah, I feel like our experience with this is a little bit different. I don't think it's so much about a volume thing. I do think that we have to admit, a property, it fits into a human being's life, and life happens, life comes at you fast. We all know these types of expressions, right? And so there is always a little bit of timing. You could send the same person the same letter in April and again in July, and life could have changed very much, and it could be top of mind one time and not the other bit. So there is a little bit of that. But the two things that I personally experience this all the time, and then I see that my coaching clients experience this all the time too, which is, I love these two things because I think they're encouraging. The first one is people call us back and they say, I get letters every week or postcards about my property. I have never called anybody back before, but I'm calling you back. And I'm not sure exactly why. Something just felt a little bit different. That's the first thing we hear. And then the second thing is you'll get a call from somebody who received this letter 6 months ago, 2 years ago, 5 years ago. And because they read it and it felt like it was coming from a real person, but the time wasn't right, they just stuck it in a manila folder. And when the time was right, they called back because it was worth saving. I like to say that has a quality, personal, relationship-oriented letter has like a residual value. Most people probably don't receive a glossy, bright yellow postcard and go, "Oh, how sweet, I'll put it in the file." They're like, "Okay, that's not for me." But this other one's like, "Oh, these are real people. Time is not right now, but I'll keep this so that when the time is right, I can reach back out to them."
That is fantastic. It sounds good to me. So what's your, what do you think your superpower is? Because there's a lot of, we were talking earlier, there's a lot of people that talk about seller financing. It's the, with the Pace Morbies, I mean, that's the sub too, but they talk about seller financing and all these other, loud gurus and stuff out there. And just in general, in our own community, we have a lot of people that talk about seller financing, pursue seller financing. What makes your approach different, you think, as far as, success rate or, sets you a little bit different? Yeah, because I feel like, do you feel that a lot of people talk about it and maybe they have missed opportunities because they approach it in a thinking only about them. And like you just said, we're shopping for, I mean, the distinction right now is even who you're reaching out to. We're shopping for a person, not a property necessarily, right?
Yeah, yeah,
Um,
exactly.
but what's your superpower? Is it your conversation approach or your mindset of being a deal architect, we'll call it, versus a investor minded person? And what's that mean? What's the difference there?
Yeah. Well, I think all of that has a lot to do with it. I think that there's kind of like the core issue, the kernel, like the bottleneck, the superpower. I would love to explain that because I do feel like that's what I personally have become good at. I feel like it is the key overall to this approach, and simultaneously, like transparently, it's the thing I see uh, coaching clients have the hardest time learning because it's a little bit counterintuitive, or maybe not counterintuitive as much as it sort of goes against a person's natural knee-jerk reactions. And that is simply this: if we can facilitate the conversation in a way that elicits insights from the seller about why seller financing might be a good fit for them, and we do this in a way without showing up and saying like, I want to do seller financing. If we make it all about them and we ask good questions and we ask sometimes rhetorical questions and we invite them to share the things that we know would be helpful ultimately in making a seller financing proposal, not an offer. We can come back to that if you'd like, the difference between proposal and an offer. If we can get them to tell us what we need to hear in order to then responsibly make a proposal back later that meets those needs, that's where the magic happens. So the main mistake I see people, in my opinion, make as they're trying to get seller financing deals, because I have the privilege of talking to a lot of people about this topic in particular. And I hear lots and lots of people say things like, oh my gosh, seller financing is just not that common in my area. Or I have asked 100 times and nobody has said yes. Or, things along those lines. Or they have these assumptions about how seller financing is only something a seller does when they don't have any other options. That's sort of a last resort. So the number one mistake I see people make is that they show up in one of these seller interactions and they might as well be wearing a t-shirt that says, I want to buy your property with seller financing. Their own agenda is so obvious. It's so present. It's so announced that it puts the seller kind of on guard a little bit. I think a much better way to think about this is like a prescription diagnosis kind of situation. If you walked into the doctor's office, sat down, and the doctor walks straight through the door and without barely even talking to you says, I think we should prescribe you with blah, blah, blah. You would go, what? I haven't even told you what my symptoms are like. And you would start to think, obviously, this doctor has got some incentive of their own to be selling this pharmaceutical. You'd be really weirded out by that. It would seem super tone deaf. It would seem very one-sided. It would like, oh boy, the trust, it would just be destroyed. And that's kind of what happens in these situations. People show up and they're super excited about seller financing for good reason, as they should be. I mean, I get people excited about seller financing all the time, but their enthusiasm makes it too obvious that it's what they want, rather than facilitating a conversation where the seller financing clues kind of come to them. Because if you can ask a seller questions and they answer with things like, oh, I'd love to sell this property, but man, those taxes would kill me. Oh, now we're getting somewhere, because the next meeting, you can come back to that and you can say, oh, you know what? I was thinking about how important you said it was to you to not have this big bill next April. And so I've been brainstorming a way I think we can accomplish that for you, right? If we can get the seller to say these things, then when we are making our proposal, which is something we knew from the get-go, we wanted to make this seller financing proposal. But if we can wait and elicit the information and the insights from them, then we can make it in a way that it doesn't look like it's serving us at all. It makes it feel to them like it's totally tailored to what they're trying to accomplish.
What would be some questions because what I like is I call it understated elegance. I like to be subtle when I am even as a real estate broker, right? speaking differently, like you said, that elicits the information that you need to learn about their wants and needs and personal situation in a way that's not salesy, or you're barfing your obvious stuff onto them or whatever. What are some questions that you, I know we're there to listen, right? And part of it would be the natural conversation flows, and that you're very in tune with picking up the cues on what they're trying to tell you. But I imagine you're sometimes having these meetings. And first of all, are you ever doing this on the phone, or are you only doing this in person?
So I think a lot about the what I would call the hierarchy of communication. Like at the very bottom is texting somebody. A little bit up from that is email. Up from there is phone, and then and then meeting them in person. And then I'd say the very pinnacle is meeting them in person at their own home. So to answer your question, absolutely, these engagements almost always start with a phone call, because that's mostly how people tend to respond to the letters. But I think our goal there is to establish the rapport and the relationship, but then as quickly as we can, without being weird about it, like to try to upgrade that level of communication. So when somebody calls me back from a letter, we're usually talking for 5 or 10 minutes. And then I'm trying to see if I can transition this towards meeting them in person, ideally even at their own home, to continue the conversation.
Right. And so if let's say their personality, or maybe they're not freely giving you the cues while you're there or talking to them, what questions would you subtly, without, ask them to try and get them to reveal that information, so you can take that into your toolkit there and come back later with your solution that serves what they, regurgitating to basically what they really want?
Yeah. So I think a couple of things are important here. I think it's good to have some questions in your back pocket, in your repertoire, that you can bust out when you need to. But I do find oftentimes, honestly, just through the process of having a regular human friendly conversation, taking off ramps, you see a photo of some event that they were just at, asking questions about the photo, and taking the sort of normal, natural off ramps that people have, you'll tend to get little clues that you can then, follow up on. Like, oh, here's the photo. Tell me, it looks like you guys are having a good time. Was this really recently? Oh, yes, it's with my granddaughter, but unfortunately she lives 2 states away now. Like, oh, okay. Does that have something to do with why you're thinking about selling this property, perhaps? Like, is it you wanting to be closer to your granddaughter? And those are sort of natural things that happen. But if you need to sort of, stimulate the conversation, I do think it's good to have a few questions sort of in your back pocket. Like, for instance, you might ask somebody like, wow, if you sell this property, what are you going to do with all your free time? It sounds like this is really going to untether you. What are you going to be doing with this? Right. In the process of them answering that question, they might give you a clue like, well, we're going to be buying another property, and I'll be managing that one instead. Okay. Now we have some sense for what their thoughts are on maybe starting to talk about capital gains a little bit. They have to exchange this property for another one. Oh, now we might ask, oh, you have your eye on another property specifically already? Is that, oh, you're selling this one in order to buy the next one? Oh, no. We're selling this one, and we sure as heck can't afford to pay the capital gains. We don't like what's going on in Washington right now, or whatever, and we don't want to be sending our capital gains tax there. Oh, great. So now we're starting to collect insights, things like that. There can be moments when you might even more directly just say, so are you going to be then exchanging this one into another one if you find the right buyer for this property? That starts to give us insights about what is their awareness around things like capital gains? What is their attitude around things like capital gains? Because we're kind of like collecting attitudes. I mean, I feel like our job in this stage of the negotiation is our job is to be a detective and a sponge. Like, ask good questions and then just listen. Like, you're not really reacting to anything. We're just sort of asking natural follow-up questions.
And so I think is a good point to mention, what is the information in regards to being able to deal architect a seller finance transaction that we're actually kind of needing to get? We want to know, tell me if I'm wrong, if they're going to have a tax issue that we can then propose on how to solve that, help them solve or defer or whatever that one, or number two, do they want and need continued cash flow? Is that what we're trying to gather the clues on? Are those two things, taxes and cash flow? Or is there, I mean, there's always more, but
Yeah.
a seller finance transaction is a solution to cash flow, continued cash flow, and deferring taxes. Is that accurate?
Yeah, it is. And so I think one thing I like to emphasize for people is that a seller financing proposal is a solution to a problem. However, and this is a big however, these sellers we're talking to do not often feel like they have a problem at all, right? And that's what makes these people so different than sort of our normal, like, motivated sellers who kind of like, there's a general acknowledgement that there's a problem or a challenge that needs to be solved. Most of the people that we're negotiating this in this particular way, like this audience, this pond, as I described it before, these are not people who, I mean, there are motivations there, but it's a lot of times to be motivations. It's not exactly right. You know, people can be moving away from something like a bad roof or back taxes on property taxes or whatever, a red tag or something like that. But then other people can be moving towards something. And I would say generally the people we're talking to here are moving towards something more. Yeah. But back to your question about what are the things that we need to learn? For the most part, so there's a big distinction between the information that we need to know, and then there's the attitude of the seller about the information. A lot of times we know a lot of the information, right? I mean, if they bought this in 1995 and it's now 2023, we know they have a capital gains issue. Like that's not really the issue. I think the bigger issue is, how does the seller feel about it? How aware are they of it? Are they like, oh, it doesn't matter, it's my privilege to pay taxes because I've had so much appreciation? Or are they like, oh, heck no, there's no way we're doing that? What are their attitudes around all of that? So we're trying to understand their attitudes so that we can frame, ultimately, a couple steps down the road, frame a proposal in a way that is going to match with, you know, their attitudes, right? If they're saying things like, I can't stand what's going on in Washington and I want my capital gains tax bill to happen when there's a different administration in there, we need to understand that so that we can then frame our proposal in terms of that. There's, you know, little bits of.
That's interesting. So we're, you know, very, very, very interesting. And here's the nugget there, right? I'm going to point it out to everybody. You can figure out, like Jeff is talking about, which properties are ripe that are going to, you know, for seller financing based on data that is available publicly. They own it free and clear. They have very low debt. They've owned it a long time. It's a rental property. That's data, but it's not emotion. It's not human, right? And so the negotiation and the proposal, we'll say the proposal, is built around not their data. It's built around the human. And unless you get to that human part of it and are keenly listening and absorbing like the sponge, the human part, you could never predict that. Right?
Yeah, you can't predict it, and you can't make assumptions about it. I think assumptions are one of the slipperiest slopes for us, because we can't help but think, well, if it were me, here's how I would feel about that topic. But people can be so different, you know, stages of life, different attitudes about everything. I mean, you could stand up three sellers who look all the same. They all own a property that's virtually the same, you know, and for just as an example, one thinks this is the best time to buy real estate ever. And thus, you know, because of, like, they think, oh, inflation, that means you should buy real estate because it's inflating. And thus they think their property is worth a lot. The next person on the list is like, I don't know what's happening. They don't have any opinion about that. And then the third person, who looks exactly like the other two, is like, oh my gosh, the economy is going to hell in a handbasket. I got to get out now. I can't even believe you would want to buy this. But we would never know that by just looking at them. And we would certainly.
Because they all look the same on paper.
They all look the same on paper, and every other way. So we have to tease out those insights so that we can make a proposal in light of how of how they see the world.
So give me an example, I don't know if you can or not, of like how you would then, somebody gives you some information about their humanness, what their future plans are, or they've expressed themselves in a way that gives you the information that you need to wrap your proposal around that. How, so somebody gives you a piece of information, how do you make a proposal around that? I don't know if you get what I'm asking.
Yeah, absolutely. In
Yeah.
fact, I have basically a 5-step kind of framework for delivering a proposal. So first of all, it needs to be, again, face to face. A proposal is totally different than an offer, in that an offer is like us saying, well, here's what I'm willing to do, take it or leave it. Proposals have counters, things like that. Offers have counters. Proposals, on the other hand, are much more about the seller. It's much more about us saying, I've been listening to what you're trying to accomplish. Here's my recommendation on how we go about that. We're not asking for a counter. We're asking for feedback. So proposals have feedback. It's a much more collaborative and softer process. An offer is a 40-page PDF these days. A proposal is a conversation with maybe a piece of paper with 4 or 5 bullet points on it.
So when you make your proposal, you're not proposing, you're not giving them an LOI, you're giving them just like a proposal.
Yeah, it's a proposal in a conversation.
Yeah.
That what I usually do is write up a sheet with, literally like 5 or 6 bullet points on it in big 14-point font, because we're just trying to talk about the key sort of elements here. So if you'd like, should I share the proposal framework real quick?
Sure. Yeah.
Okay. So I think the first most important thing is we have to, before we've given them even show them our single piece of paper with the bullets, the first part is we have to say, okay, Bob, so we've been chatting for a little bit, and I just want to make sure I'm totally clear on what we are trying to accomplish. I think so, but I just want to run this by you. You mentioned that your granddaughter, who's only 2 right now, has moved about 2 states away. You feel like you kind of missed the opportunity to be the grandparent you want to be with your first grandchild, and that's kind of the main thing you're trying to accomplish by selling this duplex. You're also not real excited about the capital gains tax and the lack of income, but you feel like you need to cut this cord so you can go be closer to your granddaughter. First of all, is that really what we're trying to accomplish here? So, and normally Bob's going to say yes, absolutely, because, and Bob's probably going to lean in a little bit and go, wow, you were really listening. Thank you. Okay, great. So now we've got their head, kind of nodding up and down. Then I say, Bob, is there anything else in there that I didn't include? Anything I've forgotten or that's also important? And normally Bob will say no. Okay, so that's step 2. Confirm their goals. Secondly, make sure there's nothing else. The third thing I'm going to do is I'm going to share my rationale. Say, okay, so Bob, here's what I did. I'm glad to hear I understood correctly. I went back to my office. I got a nice fresh cup of coffee and my favorite pen, and I sat down and I started brainstorming and asking myself the question, how could I buy Bob's property in a way that it's not going to hurt from a tax perspective so far, is going to give him the freedom to go to, Arizona, and is also not going to limit his income stream. And I felt like that was the challenge for me to brainstorm around. Does that seem right to you, Bob? Right. So now they're agreeing with the rationale and the methodology. And I say, great. So here's what I came up with. I would like to buy your duplex from you for $600,000. I'd like to give you a $50,000 down payment. Now, I didn't just pull that out of nowhere, Bob. So $50,000, I think, is just a nice sweet spot where that I've got skin in the game. There's no way I want to walk away from $50,000, but it's also not so much of a down payment that you're going to be hit with a big tax bill just on that down payment alone. So that's where we set. That would leave us with a promissory note of $550,000. Now, here's what I did then, Bob, is I said, I know you're used to netting, X dollars every month from this property, and you'd kind of like to keep it about the same there. So I did the math sort of backwards, and I said, here's the interest rate I think I should pay you so that your income feels very similar to how it's been for the last several years owning this property. And you've mentioned you kind of want this to go on for about 10 years, and then you can reevaluate. So I'm suggesting a term of 10 years, interest-only payments during this period, and then there'd be a balloon payment at the end of those 10 years. But Bob, I'm not a take it or leave it guy. This is step 5. Tell me, what do you like about this? Did I hit the target? What feels right? What doesn't quite feel right? What's your feedback on this? And that's the fifth step, is to get their feedback. Sometimes I like to hand people a literal or a metaphorical red pen and say, like, okay, tell me, this is my best shot at this, but there's nothing set in stone here. I'm not walking away. Tell me what you like about this. What hits the target? What doesn't? And when we do that, it feels consultative in nature to them. It feels like an appropriate an appropriate prescription based on a thorough and accurate diagnosis. And that makes sense to people. It makes them feel heard.
That is wonderful. It's a lot better than saying, have you ever heard of seller financing, Bob?
Yeah.
You know,
do you want to carry the note?
Yeah. That is wonderful. When do you show them your bullet points?
Yes. And it's pretty much, I would say, after I've confirmed the goals, made sure there's nothing else, confirmed the approach, and I would say, okay, so here's what I've come up with. And I would then take this little piece of paper and, spin it around and push it in front of them again in big 14-point font, because I don't want them like needing to look hard. It's not just that they're older folks. It's just like, this should be simple. If it can't be in 14-point font, so it should be. So I'll sort of read through it upside down and walk them through. So here's what I'm thinking for price. Here's what I'm thinking for down payment, et cetera.
Awesome, Jeff. Just feels so good. I got the little goosebumpies here and everything like that.
Oh, good.
One of the things that you guys, because I know you guys are all going to want to connect with Jeff after this, and one of the things that you'll know that he has is high integrity. And I'm pulling those words right off some of the information I have from you as well. This is a quote from some of your stuff, Jeff. It says, feel good about how you're building wealth, knowing you're helping sellers along the way, not exploiting distress. That is the shit right there, guys. If that sounds like you and how you would like to grow your portfolio and the tribe that you would like to hang out with, please, after this podcast, go connect with Jeff. And please stay connected with me, because we're like a bro and a sister team here on the mentality of this type of interaction with people. And just so you know, if you're listening and you're a broker or you're a broker investor, you're moving towards wanting to be an investor, these exact same communications and relationship building is exactly how you should approach your real estate brokerage business. The same stuff, whether you're trying to secure a listing or helping them sell their property off market, or connecting somebody like Jeff who might want to buy that property. If you're able to bring up these discussions, it's the same mentality and approach to listening and making a proposal. This framework that Jeff is talking about, why I love it so much, can be applied globally in your world, not just about seller financing. This is how you should interact with people, right? You're making proposals to them. You're listening and making proposals to them. So this is a bigger conversation with obviously our shows about real estate investing. So we're focusing on that. But I just want to point that out, is it can apply to many, many things. This is fantastic. Well, that is great, Jeff. I want to let people know, as we're going to get wrapped up here, because we could go on like this forever. But how can people connect with you? Because you're a refreshing approach, and you are who you hang out with, guys. You are who you hang out with. If this resonates with you today, his approach, not because you're like, oh, let me get that letter template that he uses, or let me get that stuff. Okay, yeah, you're probably going to get that if you hang out with Jeff. But more so, if this resonates with how you want to do business for yourself, and go and feel good about it, and create value for win-wins for everybody, then I think Jeff is your guy. And so how can people get connected more with you, learn more from you? Like, what's the deal?
Yeah, thank you so much. I'd love for people to check out my podcast, Racking Up Rentals. It's probably 3/4 kind of monologue style, and then the other fourth maybe interviews. So but I'm constantly talking about this overall approach and all the various aspects and nuances of it. So Racking Up Rentals on all the podcast platforms. And then otherwise, I'm very, very active on Facebook. So I'm easy to find on Facebook under Jeff Stephens. That's Stephens, and the Thoughtful Real Estate Entrepreneur. And I would also just offer too, recently, maybe 5 months ago or so, I created something called a Seller Financing 101 free video training course, because I felt like, gosh, I want more people that I can have advanced conversations about seller financing with. But it's like, gosh, we have to have a common language and foundation and framework first before we can have the advanced conversations. So I created a simple website. It's just free to register. It's at sellerfinancing-101.com. And my hope is that, with 3+ hours of me personally providing training there, kind of gets people up to speed, gets them excited, and points them in the right direction.
So awesome. This is a good one today, guys. I hope that you understand the distinction of the not just the finesse and the how to handle things right, but coming from the right place. You will do more deals, and everybody will be happy if you're coming from the right place and you're protecting those sellers as you're communicating with them and helping them move on out of that property into whatever their next chapter is. So awesome stuff today, Jeff. Like I said, guys, I could go on forever here today, but we're almost an hour in here, and we want to, I'm sure you're anxious to get over and take a look at Jeff's stuff anyway. So thanks again for hanging out with us and being part of our tribe here at Seattle Investors Club. Joe and I thank you for sticking by us all these years, or if you're new, joining us, make sure that you jump over to our YouTube page, where we also have hundreds of hours of education and great interviews with other investors and lenders and private money lenders. Everything you could think of is over there, all for free for you guys. And if you like the content, please subscribe, and whatever you have to do, hit the notification button or whatever they say. I'm too old to know what you're supposed to say, but something like that, we would appreciate it. So today, where can everybody find the details of today's podcast, where we have all the stuff transcribed and all the links to Jeff's stuff here, guys? Where can we find that, Joe?
Yeah, so you can get that on our website at seattleinvestorsclub.com/180, or if you're watching this on YouTube, it will be down in the description below. So just click that more button and it will be right there.
Awesome stuff. Good stuff, everybody. Well, happy April. Hope you don't get snowed on, or maybe I hope you do, one of the two. But we will catch you next time on the Seattle Investors Club podcast. See you later.